Hey guys, today we're going to do a quick overview of a company in the uranium sector called Uranium Royalty Corp. Ticker symbol UROY. Now, the interesting part about this is that they are the first and only pure play uranium royalty company. And we're going to go through what exactly is a royalty. We're going to go through their business model. We're going to look at their executives and some key points, and we'll also look at price targets from a analyst. So let's dig in. So, like I said, UROY is the ticker, and URC for short is the first company to apply the successful royalty and streaming business model exclusively to the uranium sector. Has a strong balance sheet, $142 million in liquid assets, which positions it to capitalize on accretive uranium royalty and streaming acquisition opportunities. They also have physical uranium ownership, which is unique. Through opportunistic market purchases, the supply stream with CGN Global and its approximate 3.8% stake in London-listed Yellowcake PLC, URC holds interests in physical uranium acquired at cyclical lows. They have a large and diversified royalty portfolio. Portfolio includes interests on 15 development, advanced, permitted, and past producing uranium projects in multiple jurisdictions, including royalties on the world-class McArthur River and Cigar Lake mines. And they have the expertise. Management and board possess decades of uranium industry experience, including senior executive and advisory roles to prominent companies and governments in the sector. And we'll take a look real quick at the management and board. You got Scott Melby, which is a uranium industry veteran with 38 years experience, including executive roles with Cameco, Uranium One, and Uranium Participation Corp. You have Amir Adnani. He's the chairman, entrepreneur, and founder, president, and CEO of Uranium Energy Corp. And then Veena Patel, raising capital from institutional investors in mining and exploration. So you have a ton of experience backing this company. Now, uranium typically used for nuclear power generation. And in my eyes, we're going to need to do a lot more than this. A lot more of this. Solar, wind is just not going to cut it for the demands that the world has. So uranium, nuclear is probably going to be the wave of the future. So how do they do it? What is their business model? That's kind of what I wanted to get to with this, along with the price target. So let's take a look at what is their business model, basically. Royalty and streaming. We got to find out, what is a royalty. A royalty is a payment to a royalty holder by a property owner or operator of a property, and is typically based on a percentage of the minerals or other products produced or the revenues or profits generated from the property. The granting of a royalty to a person usually arises as a result of paying part of the consideration payable to landowners, prospectors, or junior mining companies for the purchase of their property interests, providing capital in exchange for granting a royalty, or converting a participating interest in a joint venture relationship into a royalty. So, for instance, a miner wants to explore the mines. URC can, give them money for interest or royalties of what's produced. So their business strategy. The company's long-term strategy is to gain exposure to uranium prices by owning and managing a portfolio of geographically diversified uranium interests, including uranium royalties and streams, debt and equity investments in uranium companies, and holding physical uranium from time to time. Like we said, they hold some uranium on their books, physical uranium that they bought at cheap prices. In addition to its existing portfolio of royalties and a strategic investment in Yellowcake, the company's primary focus is to identify, evaluate, and acquire the following: royalties and uranium projects, pursuant to which the company would receive payments from operators of uranium mines based on productions and or sales of uranium products. Uranium streams, pursuant to which the company would make an upfront payment to a project owner or operator in exchange for long-term rights to purchase a fixed percentage of future uranium production. Offtake or other agreements pursuant to which the company would enter into long-term purchase agreements or options to acquire physical uranium products, and direct strategic equity or debt investments in companies engaged in the exploration, development, and or production of uranium. And their business model, lower volatility through diversification. Since the company does not operate mines, develop projects, or conduct exploration, the cost is low. The company's business model is focused on managing and growing its portfolio of uranium interests. The company believes that the advantage of this business model include the following: lower volatility. By investing in diversified uranium interests across a spectrum of geographies, the company reduces its dependency on any one asset, project, location, or counterparty. So they don't have just one mine that, if things go wrong, they're in trouble. They're diversified globally. Exposure to uranium price optionality without project costs and overhead. So the company believes that its model provides exposure to any future improvements in the uranium market, while at the same time minimizing fixed operating, exploration, development, and sustaining costs associated with directly owning and operating uranium projects. Additionally, as the company's interests are non-operational, the company is not required to satisfy cash calls in order to maintain its interest in such projects. So even if the project gets halted, they still have some interest in it. So when it comes back online, there's still profitability there. Focus and scalability. As the company's directors and officers do not handle operational decisions and tasks related to uranium projects, they are free to focus their time and energy on carrying out the company's acquisition strategy and identifying and executing on growth opportunities. As such, URC's business model allows it to acquire and manage more uranium interests than an operating company can effectively manage. Now, that's their business model, like uranium interests, right? So they're not going into mines and mining the actual uranium. They just have royalties. They get royalties from it. So if nuclear energy basically becomes more in demand, which it is, they don't talk about it much, but it's really becoming more and more of a necessity in our world, they stand to benefit. Now we'll look at one last thing here. Price target of Uranium Royalty Corp from CG Capital Markets. This is back in November of 2022. They rated as a speculative buy. They have a price target of $6. This is Canadian money. So basically a double from here. Uranium Royalty Corp announced its decision to elect to receive royalty proceeds from the McArthur River mine given its recent restart of production, announced November 9th. So URC owns a 1% gross overriding royalty on 9% of overall uranium production from McArthur River, drawn from Orano's 30.2% interest. So this would, McArthur River has guided up to 2 million pounds of production in 2022 and 15 million pounds from 2024 onward. This would imply up to 1,800 pounds payable to URC in 2022 and 13,000 pounds thereafter at the current spot price of $50 a pound. That is, if it stays at $50 a pound. Historically, uranium has been as high as, mid 100s. By taking physical rather than direct cash, URC effectively increases its leverage to spot uranium prices by maintaining control of the timing of sales from its physical portfolio. So they're sitting on a bunch of uranium just waiting for that price to capitalize. And with the growth of uranium and nuclear energy, I'm sure that they will be able to do that. So they have a price target of $6. One other place, HC Wainwright, they have a price target of $5.70. So their analysis is they hold roughly 127 million in cash, marketable securities, and physical uranium holdings. We highlight the company's inventory, which to date consists of approximately 1.5 million pounds of uranium at an overall weighted acquisition price of $42.30 a pound. So all the physical uranium they hold right now, they bought at $42.30. So anything above that is profit. So if uranium and the demand for uranium increases over time, they are going to win out. So like I said, it's a research stock. I will provide plenty of links down below. I would advise you to read through them, right? Take a look, see if it fits your portfolio. I rate it like CG rated it. I rate it as a speculative buy. I'm going to put it on my watch list. I'm going to watch it because I think uranium and nuclear energy are the future. But that's just one man's opinion. You got to see where that fits in with your investment objectives and your portfolio, and how much space do you have for speculative investments. So hope you enjoyed. This is UROY, Uranium Royalty Corp. Thanks for watching. We'll talk to you later. Thanks. Bye-bye.